Hello everyone. Welcome to another Around the Block talk show. So today we have with us Mr. Vikram Pandya. He is uh, he is the founder and director for Association of Emerging Technologies, and also the director of Fintech for SP Jain Global School of Management. And he's an industry veteran, uh, has served in leadership position of various firms and projects. So I'll hand it over to you, sir, and we're looking forward to what you have for us today. Thank you.
Thanks, Prateek. So there are few things that I would like to discuss on the overall blockchain and cryptocurrency side, and of course, I will share later on some material as well as some PPT. But to begin with, let's understand the situation right now. Right, so we see that all the cryptos are going down, and major investors are in a way worried about the stability of stablecoin itself. So when we look at this major stablecoins, so what is happening in that scenario is that there are two major kind of stablecoin. One is something which is having value pegged to some USD or any other asset, but along with that, they also have reserve of that pegged asset. So let's assume you have USDT. So they claim that they have reserve maintained in that currency, and then they can use that reserve to repay. But however, there are cryptocurrencies which are stable coin, but they derive value out of the algorithm or algorithmic stable coin, as we call them, which means that there is a swap mechanism which works behind the scene, and using swap mechanism they try to identify and discover price. And what happened recently in last couple of days and week is that there is a famous crypto stable coin called Terra, and now of course it is a link to Luna as a currency, and that lost its peg with USD, and now it is trading at almost zero. So that is what happened, and because of that, this entire sell-off happened as one part of it, and second, the stability of decentralized finance also went off, and because of that, this created another issue. So this is the highlight of what happened during this week and why cryptos are in major trade. I believe that regulator in India has always taken firm stance that okay, if you are not able to understand anything in complex environment like India, you should always start with simpler product and then go for more complicated and complex product. That is what they believe, and I also believe that is true, given that you have so many different complications when it comes to all these different hybrid products, that it becomes very difficult for regulator to come to know about the hidden risk. So today, if you look at in yield farming and decentralized finance overall, when you look at, there are so many risks which are collateral based risk, there are non-collateral based risk, then there are hidden risk, as we call it, where what happened in CDO CMO in 2008, you have a correlation based risk, and all these risks are hidden in the system. Nobody knows how it will pan out. So more complicated product you build and you don't understand the risk within that, then the bubble that you can create is much bigger. And the worry is that today the bubble which is already there, many people believe that, many people believe that no, this is good time to buy new crypto again. So I personally believe that there was a bubble definitely, and what is the size of bubble nobody knows. So how long it can continue to burst nobody can tell, as well as the correction is good anyway because you are able to now identify loopholes in the system or shortcomings in the system, and now you can fix those shortcomings and come up with better model around what cryptos can do or what cryptos can overall help. So that is the updates on whatever crypto system is going through. Coming back to, because many people may have fundamental doubts around what is blockchain, what is the cryptocurrency itself. I'm assuming many of you may already are aware about the basics, but if not, I will show you some analysis around what is happening, what may happen, and what exactly is the direction. So let me share my screen in a second. If you have any question, Prateek, feel free to ask. Before we continue with this, you can ask some relevant recent questions also, and I will be more than happy to answer them.
Sure, sir. I think the topic that you speak upon, the current crash, and we saw that particular cryptocurrency, Luna, that lost its value. I mean, more than 90%. It's almost trading at nothing.
It is more than 99% now, in fact.
More than
yeah,
99%. Right. So it's completely lost its value. And because of that, some stable coins which were pegged to that particular currency, they also lost their coins.
Correct.
So
the regulator has the right concept. When US, if you look at on the Fed side, they have the right concept saying that when you look at overall stability in the financial ecosystem, this sort of crypto stablecoin coming to normal financial ecosystem and integrating with it can have adverse impact in future, because today it is not that much used in everywhere, right? I'm saying that when you look at across the globe, this DeFi might be 0.00% of overall finance. But in future, if this grows further and if you are not able to identify the underlying risk itself, then there is a major issue, because then in future, if something like this happens and if this is some major currency, and that cannot work well with the financial ecosystem. So their concern is good, and it is of course warranted as well. But when we look at in India, specifically in India, the RBI is very clear on one thing. They are going to have their own stable coin kind of a thing, which we will call as CBDC right now. And it is a central bank digital currency. Across the globe, CBDCs are going to have more priority for everyone to work with, because there are advantages of blockchain ecosystem, or in a way we will say crypto fiat. Rather than using crypto INR, I'm just using crypto fiat as a generic word. And you have transparency, traceability, governance, all these advantages which comes with the crypto. And with the fiat, you have the trust of government themselves that, okay, if RBI is issuing directly crypto INR in future, then that rupee will make it much more easier for everyone to use in DBT ecosystem, or whether it is tracing and overall governance. And I believe that in future, this e-rupee mechanism that we already have, which is non-crypto, it is going to be similar to that with more refined structure. So in e-rupee, what we have is that it is a person-specific, purpose-specific usage of fund, which is already there now. UPI-linked product they have created. NPCI has launched this in September 2021. It will be similar to that, but it will also allow you, because it is a programmable money. Right? At the end of the day, crypto money is in a way programmable money. And programmable finance is going to change the world as we know it. Because today that currency moving around is one thing. In cash or in kind or in whatever it is not traceable. Nobody knows whether it is used for the purpose for which it is supposed to be used. So it can change. But for better or for worse depends on the implementation. So there are concerns around digital rupee, or let's say even the CBDC, when we say about that somebody can use it. Let's say China, for example, right? They already are looking at some of the use cases. They have live CBDC, and they are looking at some of the use cases where they may want you to use it in certain direction only, or a certain frequency only. Right? So once you put certain condition, you lose that freedom that it is your money. The way you want to use it, you can use it. But from the economy perspective, it might be better. From individual perspective, it might be worse, because now you are being directed towards what to spend, where to spend. From the economy perspective now, because government is directing people on productive usage rather than something which is unproductive, overall economy may thrive and survive. But individual rights are a challenge and an issue in future. So that is what people need to worry about. Any other question on related stuff you have?
Maybe, sir, just one more on this. So one thing that comes into question is the fungibility of currency. So with cash, it's highly fungible. There is no traceability. Now, if everything with CBDC in particular, with the central government tracing everything, what do you think are the implications for the fungibility?
There are two things I will show you later on as well. There are two things which you need to understand. Right? Let's look at today's fiat ecosystem. When we say Fungibility, there are two kinds of fungibility. One is acceptability is one part. We are not going to talk about that. And the second is more about whether you are able to get this currency instead of other currency. Right? That is another fungibility. And I will use better word, which is interoperability, because when we use just simple word fungibility, even in a true sense, if you look at your whatever bank amount that you have today is fungible, fungibility perspective. But interoperability is more critical in crypto world. So when I'm using one blockchain or one framework or one network, which is created based on certain parameters, certain protocols, can I use native currency from that network and go to another network and start using that, right? Now, the better part of your next, let's say, decade will be around this only. And the good news is that we already have some tried and tested solutions. One example is interledger protocol. So interledger protocol, when you look at it is, of course, created by Ripple, and they try to manage it, maintain it. And based on that, what they are trying to achieve is that if you are just implementing and making your network, which is going to use interledger protocol as part of it, it will automatically become interoperable, because then that protocol will talk to another network, and if again the same protocol is implemented on that network, it is interoperable. That is one level of thing where you have some intermediary which is part of that network which will talk to each other. But the larger play will be that, okay, it is completely different. I don't want to create intermediaries now in between. However, I want to expand my outreach by APIs, which is already happening. So earlier in Gen 1 blockchain, as we call it, right, and your Bitcoin or Ethereum, etc., those APIs were not native APIs. Now people are creating layers on top of it, right? But those were not native APIs directly available. But now in even in Ethereum next version, etc., APIs are going to be major part of it. Whatever new networks you are looking at today, they are opening up APIs, which means that you are making it more and more interoperable any which ways. That is one. And second, wherever it is not possible, you are using such protocols in order to work with them. In India, if you look at one thing which happened very recently, nobody knows about it, is UPI Lite implementation. UPI Lite is not on blockchain, but it borrows concept from the blockchain in a way, okay, which is a Lightning Network concept. If viewer knows about that, they will understand that Lightning Network is nothing but a network where instead of hitting network every time, let's assume we are maintaining a one-time hit network where you are hitting the network for the first time in a simpler word, and then small transaction you keep on doing in a side chain or in a separate ledger, and then you settle it once the time period is over. So it is called hash time lock contract, and that contract allows you to settle it once you are done with small transactions. So for every transaction, you are not incurring that transaction fee. That being said, UPI Lite tries to do the similar thing, because today almost 90% of the transactions on UPI, what they claim is around 500 rupee on an average. So even if they what they are looking at is 200 rupee, up to 200 rupee transaction will be through this route where it can reduce the load on the network, UPI network. And this again is one another way of creating more interoperability. And in future, when the crypto comes, similar concepts when they are being used in different ecosystem, you can connect them together easily. So that is another type of interoperability which is going to gain traction further. One more thing that you should know is on the CBDC interoperability. In future, like you have here today, you will have CBDCs working from different government. So central bank digital currency, let's say RBI issues their digital or crypto rupee. Singapore already has, let's say, Project UBIN, under which they are issuing something wholesale currency. And all these different currencies, how they can talk to each other, how they can work with each other. People are already working on, they are calling that as a MCBDC bridge. Okay, so that MCBDC bridge is right now under work, and they already have created one iteration of it, which is going live. And it is good to see initiatives like this happening even before it is required, because we have seen so far in fiat, at least, people have always seen innovation as a not a proactive measure. Right? It is always a retrospective thing that you realize, okay, I want this thing to happen, and then you do it. While in this scenario, you are able to do something where it is something you know from the learnings of fiat currency, and now you are able to implement in the crypto world. That is the benefit. Any
Sure,
other
sir. Thank
question
you.
on this side? Yeah.
You may proceed, sir, maybe towards the end.
Sure, no worries. So I will show some of the practical insights into what all is happening in overall crypto world and where we are moving, right? So I will show you, let me show you a few things. Just share my screen. Yeah. So the interesting part here is that this is the list of BTC addresses. I will not say holders because it is the address like bank account number. And the main purpose for which Bitcoin was created was decentralization, democracy, and data democracy. Along with that, when you look at distributed computing, right? These were the three Ds in a way on which it was created. Now, data democracy, for example, that is something which we are not going to touch upon right now. But when we talk about decentralization, when we talk about distribution of wealth fairly and distributed computing for that matter, right? Now we will look at two things and understand where it is moving and what may happen, right? So let's look at this very quickly, and what you can see is the balance and cumulative addresses and cumulative coins. So if you look at only this part, let's look at this part. 99.77% of the coins, right? Cumulatively. If you look at, they are held by 15.49% of the addresses. Basically 23 cumulative basis, you see it is a 23%. But interesting part is that when you look at 95%, which is over here, right? It is held by 1.63 or 1.98% on a cumulative basis. This means that the real world scenario of wealth distribution, even without crypto, is going to get reflected even when you create crypto. You know that you have income inequality, and people know about that. Okay, you have very few people holding large amount of wealth, and that will even be true when we look at on the crypto side, unless and until crypto is designed in such a manner that by nature you can't hold more than something, right? In that case, people will create more addresses. Unless until you do KYC and understand that okay, that person is holding only this much, you can't achieve the true purpose and true nature of crypto anyways, which was the earlier idea, right? And then there are certain tokens which came up with the throughput, how quickly you are spending, what is the importance that you have in the network. They came up with those different consensus algorithm. But ultimately, reality, if you look at for any crypto today, you will find similar, if not equal to what you see here. It will be similar, where maybe 5% of the addresses are holding 90% of the wealth. And that is again a very critical observation that you may want to note. In future, crypto is not a solution for the issues that you have in fiat. Crypto, however, can work with fiat in novel way and create programmable future. Okay, so that is the programmable future of programmable finance or programmable commerce, as we call it. It can create that, and that is the advantage that we are looking at. This is not going to solve anything quickly, but it is going to give rise to the opportunities in the normal ecosystem where you can then work with this programmable finance, right? Another advantage when you look at, right, the way to raise finance. Again, when you look at ICO, STO, which is initial coin offering or your security token offering, when you look at these areas, again, it is a novel way of raising fund. Some of the parameters or some of the features that they have are very good, and we definitely need to borrow from that. That being said, the trust which normal ecosystem gives you with intermediaries is unparalleled even today. So the idea will be that in future, you should be able to use limited number of intermediaries or lower number of intermediaries while bringing the same level of trust. That should be the first step, because unless until you do that, you are not able to have people migrating from current ecosystem to the new one. Any questions on this?
Right, sir. So I think one thing that you mentioned, the ICO and STO. So this demarcation depends on individual countries' legislation, and what are your thoughts on what is the difference and how can
Yes. So while you are right, it depends on different countries' regulation, but one thing is very common across everyone, right? And this came up with Harvey test, which happened in SEC and now, right, which was earlier done. So there are few rules that you need to look at. In summary, these rules are like this, right? If there is some profit sharing happening in form of dividend or any other way, right? Profit sharing which is happening, then it becomes STO clearly. If underlying is some sort of asset, then again it will be STO in nature. Now, if you just look at these two simpler conditions, then you can identify that everything else you can then create in terms of utility token. There are three types of token. One is kind of a pure cryptocurrency in nature, which is value of some exchange, that you are exchanging some value. Second is, in this scenario, we call it utility token, which is exactly similar to reward point in your credit card or whatever you get, right? Today, you may want to buy some SMS credit or email credits, and then you can send emails, right? It is similar to utility token. It means that it is a closed loop ecosystem where you can use these tokens only for your ecosystem. Third point is on the security token. Now, utility token is where you can only use for limited purpose and it represents some credit point or whatever. Here, it represents some underlying asset or it represents security. To give you some understanding on that, let's assume I want to tokenize. And what is tokenization? It is nothing but representation of some information in digital format, unique digital format. And when I talk about tokenization of real estate, let's assume there is a property of 100,000 square feet. And I tokenize that property, and one token of that real estate is equal to 1 square feet. It means that then one token will be equal to, let's say, 10,000 rupees, for example. 1 square feet is 10,000. Now that becomes my tokenization. But what is the underlying? What kind of token this is? Underlying is real estate. And because it is real estate, it will be categorized as asset token in many countries, or it will be STO in some of the countries. So it is the asset backed token. However, if I create another token, where let's say using that token, people can only access this kind of webinar, right? It is between us, right? So we are creating such webinar, we are creating this ecosystem. So in AT, we have created, let's say, this kind of a system. It is a reward point. It is why we can call this as a token, because it is on blockchain, but it is a reward point. So what do it what can it achieve, right? What do people do with that? So let's look at very quickly this social credit. So what does that do? It is ecosystem credit received for various activities on this website, right? It is Wave blockchain linked token. Whenever you are contributing anything on this website, you gain that token, and then you can use this token for some workshop like this, some applications that you may want to use at discount, all those things, right? So it is a token created only for this ecosystem. So this becomes a reward point. In general terms, it is reward point, right? And because of that, this will not be considered as STO at all. There is no underlying asset, there is no profit sharing happening, nothing is happening. And because of that, this kind of tokens are called utility token. And the other type of token which I mentioned are either linked to some security or asset, and because of that, they are STO, and they are governed by, let's say, SEBI in India, or SEC in US, and equivalent entities or regulator in other countries. So whenever somebody is trying to create this, then you can do that. But unfortunately, in India, again, right, you have income tax regulation, which are making this more difficult for people to differentiate between these two kind of token, because in India you don't have that differentiation directly visible. And because of that, let's assume you get this token and you use it. Till the time I don't call it as digital currency or digital asset, virtual digital asset, I am okay. The moment I call it and you get some inferred benefit also, then what to do with that is not yet clear. Okay, because you know that whether it is that benefit which is an inferred benefit, it is not direct benefit, it is the ecosystem benefit. Let's say you are using a token and instead of this workshop is paid one, and there is a 500 rupee cost for everyone to attend. Now if I am paying 500 rupee, in that scenario it is fine, it is a direct transaction on fiat. But if I tell you, if you have this token, you can pay using that token, then what will happen in taxation is not yet clear, because it is again subject to GST or not, what kind of TDS will be applicable, because it is just in lieu of currency you are using it, right? So it is while reward point, which you can just use as reward point without showing this under crypto. In India, it is not yet clear. So I wanted to make sure everyone knows about this. Hopefully now you are clear on this two sides, right?
Right.
What is
Sure.
STO? ICOs are typically and normally for this utility token. There are some ICOs which we call as IDO or IEO, which is the initial exchange offering, which are different, but we'll not talk about them right now because people may get confused about it. So let's talk about these two, which are the major two differentiations. Any other
Sure,
questions?
sure. No, so I think we can proceed, but definitely Indian government needs to have some more legal framework on tokens and to be able to.
It is not only the taxation framework, but there are two kind of frameworks, right? Today, even if let's say tomorrow government of India says cryptos are illegal, then also taxation will be applicable to it. Even illegal items are subject to taxation. Okay. So far, many people ask me whether the cryptos are legal in India. As of now, because it is not illegal, people can say that it is legal. But all the hints are showing on the future, which may create some threshold on what you can do, what you can own. That is what I personally believe will happen. But in a scenario when government says that it is completely illegal, you are still supposed to pay tax for whatever you have owned. And that's the reason the taxation framework always will come first before the crypto bill comes. That crypto bill is separate bill. Whenever it comes in picture and whatever form and fashion it comes with, we need to look at the legality of crypto using that bill. Taxation of crypto is already out.
Right, sure, sir. We can proceed.
Sure. So now coming back to not the crypto world, the main commercial usage of blockchain, right, which is more interesting, because I always start with crypto mainly because people are normally interested in that crypto side first. But when we look at non-crypto side, there are multiple use cases today where the entire provenance chain, provenance when we call it, it is nothing but tracing and tracking mechanism for any product. That is where blockchain is really shining. Similar to that, when we look at across the industry use cases, right, there are new and novel business models which are created using blockchain without cryptocurrency, but using blockchain. So let's look at a couple of such examples. Let's look at Project Ubin. And this is something which I'm just sharing with people so that they can go through that later. This is very useful because this is Singapore government backed, and MAS has worked with multiple different stakeholders, and it is in phases. So you can get insights into the thought process, complete thought process, how they have implemented this blockchain based, or many people use blockchain for everything, but blockchain is not the mother term. It is distributed ledger technology, DLT, as we call it, is the mother term. And then blockchain is one type of DLT. Similar to that, you can have hash graph kind of a mesh network, or you can have IOTA kind of network. Right? So they are not blockchain, but they are block DAG, block DAG, and that still come under the umbrella of distributed ledger technology. So when you look at this sort of use case, you can see that there were 5 phases in which this was implemented. And the last phase you can see was implemented in July 2020. And today they are still working on the 6th phase overall in a way. It is not yet in public, but they are working on some of the new things where interoperability and all these things are under the umbrella of this. This is where government, all the other ecosystem players like banks, etc., are coming together and working on bigger use case. Right? In India, there are not many people who may know about this, but in India also there are projects which are live. SBI is already using blockchain based trade finance platform. So I'm just going to show you that very quickly. This is, yeah, you can see there are consortium led. Right? So I wanted to show you that consortium led blockchain framework is already live in India. And there are some isolated attempts by, let's say, Yes Bank, Kotak Mahindra Bank on trade finance. And we need to understand why trade finance is really the first use case everyone is picking up, right? In blockchain world, you need to look at a very simple formula called FITS FITS. Okay. F stands for fraud likelihood. I stands for number of intermediaries in the ecosystem. Then T stands for throughput. What is the throughput of that entire network required, right? It is nothing but transaction per second in a simpler words. Throughput is that. And finally, S stands for stability of the data or staticness of data, which means that if the data is changing, it is dynamic, then blockchain is not that much useful because it is immutable as we know it. Immutability means that once you put it, it will not be changing, right? So let's assume we want to create and use blockchain for trading system like Zerodha. While you can do it, the transactional data that you have, let's say order book. When you put an order, that order is valid for some time and then it will be expired, or you may want to keep on changing the order till the time the market movement is captured. Right? You may want to do that because the data there, the price at which you want to put or place the order is very dynamic. Blockchain is not suitable for that because it will just blot very quickly. Why? Because for every transaction that you are doing, you need to reverse that first and then you need to add a new one. Because you can't modify the old one, you need to reverse that and then you need to add a new one. So it bloats up very quickly, and that's the reason it is not suitable. So stability is related to that. Coming to fraud likelihood, higher the fraud likelihood, better the use case of blockchain, because then using blockchain you can reduce the fraud given the consensus algorithm that you can use, given the overall transparency that it brings in the ecosystem and overall governance structure that around the blockchain. Second thing, intermediaries, because you are able to remove intermediaries or reduce the intermediaries, blockchain can help with reduction in cost, overall cost, because every intermediary will charge something. And if you are able to reduce number of intermediaries, then you can reduce that cost. Second thing, it brings more transparency by removing some of these intermediaries, because more intermediaries means more layers of insulation, right? And here you are removing them. Throughput, lower the better, because if you have too much throughput today, there are, however, blockchain which are supporting, let's say, 1 million transactions per second. They are claiming at least. But as you grow, there are some issues which always comes, and because of that, lower the better. Trade finance is the place today where all these parameters are positive. You have fraud likelihood very high. You know what happened in Modi case, right? That Nirav Modi case, and what happened in the case of Malia, etc., etc. So trade finance really helps in reducing the fraud when blockchain is used along with that, right? Similar to that, when you look at the second point, intermediaries, you have normally 6 to 7 entities working on any trade finance transaction, buyer, seller, both the banks from buyer seller side, and few other intermediaries like inspector, quality inspector. Then you have custom agent, regulator. So all those players are part of that, and you want to make it seamless. That is the idea. Finally, when we look at on the throughput side, I mentioned the transactions are not that high, right? And you look at any even mature bank, you will not find more than 100 TPS for trade finance business. It is a value game, not the volume game as such. So it is very low hanging fruit for everyone. So today in India, across the globe, you will find trade finance as one of the first use case in any blockchain ecosystem. Similar to that, cross border remittance is another use case where most of these uh, banks and regulators are working on trade finance plus international remittance. And once you crack that, because today both time and cost is much high, if you are cracking that, then it opens up huge global market, right? And I guess this is helpful in understanding where the non-crypto use cases are going. Right? Any questions on this?
So as you mentioned, international payments and remittance. So I think that is definitely a use case. And but do you think there's a bottleneck for throughput there for the general public to be able to do that?
Correct. So good question. What happens there? Understand whatever framework we look at, right? Even in non-crypto, with crypto you have different products available. What is a non-crypto use case here, right? So when we look at on the reconciliation side, today the non-crypto use case when you look at on the Swift network, etc., there is the one API that or framework that Swift has introduced called Swift GPI. Okay. Now this Swift GPI framework is just using DLT for that set, right? And when we look at to identify shortest route in the list of intermediaries that you have, minimizing the cost versus minimizing the time, all this different optimization that you do. That is the algorithm part. You can do it in current network also. But reconciliation normally takes long time. Right? In blockchain, given that it is a shared distributed ledger, everyone is on the same page. So there is no requirement for any reconciliation in the first case. Second case is that you can use traditional form of ledger entry to show that the transaction is settled or basically transaction is done, but final settlement can happen later. Okay, but at least the because of the DLT, the first leg of transaction, which is entry part, can be shown immediately. The actual value credit may happen later, but the trust that is required for that is separate trust, right? This is the intermediate level trust, bank to bank trust, rather than customer level trust. So that once that part is over, you can show the entry and somebody can take care of that trust, right? And fund that account and allow them to withdraw also. That is what is happening without crypto. With crypto, let's say you have Ripple and you can transfer Ripple to someone and get in fiat immediately. So then there are certain intermediaries which will allow you to convert in your normal fiat currency.
Right. Sure. You can proceed.
So there are this sort of different use cases that you may find. I will give you some examples there. So you have at least globally when you look at there are gateways, crypto gateways, like let's say Changely. Now when you look at gateways like this, they allow you to pay using cryptocurrency. So this is one way, and you can also trade. Sorry, so you can also trade using cryptocurrency, and all those things are there as a normal PAPG that you find in India. These are the crypto PAPG. Any questions?
So maybe not exactly related to this, but I think we see a lot of startups and a lot of firms in the crypto lending space, lending on the blockchain. What are your views on that, and how is that going to change?
So now what you are entering into DeFi ecosystem, which is nothing but your decentralized finance. And when you look at overall product within that, right? Let's look at where all the values are locked. Let me show you some of the breakup within that. So this is a complete list of, or let's say, some of the major DeFi protocols in the market. But let's look at the breakdown, right? Let's look at breakup within that. So if you look at within this sector, you have lending, you have decentralized exchanges. DEX is decentralized exchange. The example can be Waves protocol. Then you have assets, and what you are talking about is lending, right? So let's focus on this part for the time. Normally, what happens as a part of yield farming, etc., people look at multiple different ways to make sure that without some background, this explanation can become very difficult. So, in a simpler words, let's assume that you want to borrow something against whatever gold you have. Let's say. So today, what happens in India is that you can put that gold and you may get up to 75%, 70% of the gold value as a gold loan. Right? So we call that as a over collateralized borrowing. Why it is called over collateralized? Because you are putting more than what you are taking. If there is a price movement, there is a safety margin with bank up to 30% or 25%. Similar to that, in the world of cryptocurrency also, so same thing can happen, right? So you can create similar product where, let's assume you want to unlock the value out of your holding. You have 10 Bitcoin with you, and you want to unlock that value without selling it because you believe that the price may still go up. So you don't want to sell it. So you want to get that upside, but still you want to unlock the value. So what can happen with such protocols is that you can put that 10 BTC, and then you can get up to 50% of the value in terms of the native currency of that protocol, which is normally a stable coin or coin which is linked to something, right? And once you get that, you can utilize that for something else. So the the interesting part today is that when you get that other token, you also get some reward as a part of exchanging this. And because of that, yield farming happens. So effectively, you are getting some cashback indirectly. In a simpler words, you are getting cashback. And when you get that, your effective cost goes down drastically. Both for borrower and lender, the margin becomes high. But again, how sustainable it is, etc., depends on the growth of the ecosystem. If more and more people are coming to lend and borrow, till the time the value can still go up. Right? That is what it is in the lending side. That is one model. Second lending model is slightly different, and people call it as a liquidity pool or automated market maker. Again, this is more difficult to explain in very simple term, but let's assume you are in traditional market, you have market makers, right? But in crypto, in the decentralized exchanges, you don't have market makers. So you want algorithms to create that liquidity. And to create that liquidity, you borrow and you lend. And that becomes another lending side of the protocol. So in a simpler words, these two are the major way you can have a lending and borrowing happening in the crypto world.
Sure.
Any other question on this?
We can proceed.
Great. So I think we have now 15 minutes with us, right? So I'm assuming that in case any viewers also they have questions, they can ask. You can put in chat window or you can unmute and ask. And I have just one concept for you to understand, which is summary of or conclusion of what is happening, where it is moving, because the topic is such broad topic that you can keep on discussing a number of things. But in the interest of time, let me show you what may happen. Right? So when you look at most of these cryptos, right? When you look at Coin Gecko, and you look at most of these cryptos, how they are moving, etc., you may realize that almost everything is indirectly in the red, but then you have this stable coin, which are some of the asset backed coin. These are the asset backed coin, not the algo backed coin. They are at least having some stability, but rest of the cryptos are of course going down, and because of that, the market is where it is. But what may happen is that you may find some of the new age token on metaverse. They already were gaining traction, and in future they may get even further traction. So while I will not advise anyone to enter crypto world unless until they know what they are doing, but what you can do is your own analysis on areas or the domain which are going to grow irrespective of what crypto may be. Correct? Even with fiat, they are going to grow. Let's say metaverse, for example. If the metaverse is something you are bullish on, you can look at some project on metaverse and then look at them. Right? So, for example, you have Sandbox token, which is on the metaverse side. Then you have token on, there is another token on Mana from Decentraland Mana. Right? So these are the tokens which are on the metaverse side, and people may want to look at it differently, right? And I will say that crypto or non-crypto doesn't matter, but look at the sector or segment which you believe are going to grow and you are bullish on. That is what I will suggest. Any token without underlying usage or underlying strong network are very risky inherently because it is a network play. Bigger the network, more people are using it, larger use case. That is what it really means, right? So that is what I wanted to conclude with, saying that in India specifically, don't invest. If you are outside India, you want to invest, this is what you should follow. Why in India I will say don't invest? Because first, you are not too clear about future of crypto in India, and second, taxation is not something which is favorable in India. So I never touch crypto, and even I suggest others not to touch crypto if you are in India, because the returns etc. are not going to be something which you can predict any which ways. But with negative crypto taxation regime, it is not going to help. That is my view. And over to you. Any questions you have or any audience members in last 10 minutes? We are happy to take those questions.
Sure, sir. Thank you for that insightful talk. So, sir, lastly, what do you think is the opportunity for India in the space of crypto and blockchain?
Right. So, good part is that India has always been kind of a BPO market, right, or KPO market. Right? So when you look at from that perspective, India can become the back office of the world in crypto or in even the blockchain side, which is already happening. When you look at on the, let me show you some of these use cases. Let's say Earth ID, which is Indian company, they have created this identity management framework. Correct? Similar to that, when you look at Origraph, they have created again this Indian startup. They have created scalable blockchain. So when you look at Origraph, it is the scalable blockchain for real-time tracking, tracing, reconciliation, all those things. So this is a triple entry accounting, as we call it, and they are based on that. There are many more. There are like n number of things, right? You know, Polygon also, it was originally started by Indians, and now, of course, because of regulation, it is not there. But on the, I will show you one more example, right? So Wise, for example, Wise.ws. Now this is again on the NFT side. You have infrastructure and toolkit, and similar to that, Engage in, again, this is where some of the brands are also starting to use this, right? Engage, and your few days ago, I think few months ago, in fact, even Make My Trip had put their NFTs on that, right? So there are many use cases which are happening in India, and you need not be crypto linked always, right? You need not have crypto linked use cases. So, for example, for this NFT, you can buy in INR. It is not crypto linked. Now, again, the difficulty is that even if it is not crypto linked, what may happen is because it is NFT, when you sell it or when you want to do something with that, the Indian taxation law may come into picture, right? And that is something which is right now, some part is gray, some part is in black and white. So people are not yet clear on what you can do with some other things. Let's assume I want to create a real estate token which can allow people to have more liquidity in the real estate investment. To give you a simple example, today it is happening when we look at this property share kind of an example, right? It is already happening, but in SPV structure. It is where you have LLP or private limited company set up, and people are investing through that into some property. Now, if it is clearly defined and allowed, then this same structure can be created into tokenization, and then it can create much better liquidity, and people can own, let's say, one square feet also, right? And if you believe that in, let's say, Indore property prices may go up, but you don't have 20 lakh rupee to invest or 50 lakh rupee to invest, you can invest even 1 lakh rupee or 50,000 rupee, right? That is the beauty of blockchain, and even without crypto you can do all these things, and that is already happening in India. But with more clarity on the legal side, I think it will be much more easily available for everyone. That is my perspective.
Sure, sir. Thank you for that informative talk. And so it was a pleasure to host you.
See you all, and thanks for hosting me. Bye everyone.
Uh,